Welcome to This Explainer. Today, we're going to peel back the layers on Kroger's highly anticipated Q1 2026 earnings release and uncover exactly how a modern grocery giant actually makes its money. If you've ever walked down a grocery aisle and wondered about the hidden gears turning behind the scenes of a multi-billion-dollar operation, well, you are in the exact right place.
Okay, let's dive right into this, starting with the big picture. We are hearing straight from CEO Greg Foran, who sees Kroger's incredible daily base of 11 million customers not just as foot traffic, but as the ultimate foundation to become America's absolute best grocer. I mean, think about the sheer scale of that for a second. 11 million families interacting with this brand every single day. That kind of reaches the absolute bedrock of everything we're about to discuss.
Here is our roadmap for today. We'll cover the Q1 headline numbers, groceries, health and wellness, the alternative profit engines, the value creation model, and finally, we'll look ahead to 2026.
Section 1, the Q1 headline numbers, the outer layer.
Before we hit the raw data, it's pretty important to look at leadership's mindset. The CEOs set a very clear, focused tone for the quarter, emphasizing a culture that is, quote, never satisfied. So even with strong numbers, they are constantly hunting for that next optimization. It's a relentless focus, and it sets the stage perfectly for the massive financial results we're about to see.
And wow, this brilliantly illustrates their massive scale. Kroger delivered a staggering $1,407 million in GAAP operating profit for the first quarter alone. Actually, let's just call it what it is, over $1.4 billion. When you're moving basic necessities, the margins might be thin on a per-item basis. Nobody's getting rich off a single can of beans, right? But at this massive volume, the total operating profit becomes an absolute powerhouse.
Looking at the year-over-year growth, the momentum here is undeniable. Their GAAP earnings per share jumped from $1.29 in Q1 of 2025 straight up to $1.46 this quarter. That's a fantastic indicator of solid, sustained momentum at the top level, showing that their operational efficiencies and pricing strategies are translating directly into real shareholder value.
Section 2, groceries, health and wellness, the traditional business. So the absolutely crucial point here is that Kroger isn't just a middleman selling other people's food anymore. Their Our Brands private label portfolio is a literal juggernaut right now. It's actually stealing market share, outpacing national brands by an impressive 175 basis points, or 1.75%. This is heavily driven by continuous innovations in their premium private selection line. They're giving customers high-quality alternatives that just so happen to be incredibly profitable for their bottom line.
Beyond the grocery aisles, they're finding major wins in health and auto, too. They saw strong profit growth in their pharmacy segment by successfully shifting customers from branded medications over to generic ones. Meanwhile, their fuel segment outpaced the rest of the industry by over 400 basis points. That is a massive 4% gap. And that's heavily supported by their industry-leading rewards program that just keeps customers coming back to their pumps.
But here is where it gets truly fascinating, and we really have to ask ourselves a huge question. If their core identical sales without fuel only grew by 1.0% this quarter, where in the world is all that extra profitability and EPS growth actually coming from? The math doesn't really seem to add up if you're only looking at the store shelves.
Which brings us to Section 3, the alternative profit engines, the hidden growth engines.
The contrast here is just wild. While those core identical sales crept up at a very slow and steady 1.0%, their adjusted e-commerce sales absolutely exploded by 19%. And even crazier, Kroger Precision Marketing, which is their in-house advertising and media business, saw profits surge by over 20%. This is the real secret growth engine running just beneath the surface of the traditional grocery store.
Now, what's genuinely huge here is the milestone this represents. For a long time, grocery delivery and digital operations were basically loss leaders across the whole industry. But reaching profitability in e-commerce and media for the very first time, that proves Kroger has successfully transitioned from a traditional grocer into a high-margin data and tech player. It's a massive inflection point for the company.
Section 4, the value creation model, the corporate strategy.
Their secret sauce basically boils down to this simple three-step flow. Step 1, they run a massive, durable retail business with groceries, pharmacy, and fuel. Step 2, those daily transactions generate a huge tidal wave of valuable customer data and traffic. And Step 3, they monetize that exact traffic and data through highly profitable alternative ventures like targeted retail media networks and data analytics. It is an ecosystem that completely feeds itself.
When you add it all up, their investment thesis becomes incredibly compelling for the long haul.
They aren't just selling apples anymore. They have rich first-party data on 63 million households. They command a massive $39 billion private brand business, and they've scaled a $16 billion e-commerce segment. This isn't just a supermarket. It is a vertically integrated retail and digital media platform.
Section 5, looking ahead to 2026. Future guidance. Cutting right through the dense balance sheets and financial jargon, their reaffirmed 2026 guidance is crystal clear. They anticipate between $5.0 and $5.2 billion in adjusted FIFO, or first in, first out, operating profit. They're guiding for an EPS of $5.10 to $5.30, and they expect to generate nearly $3 billion in free cash flow. That gives them serious capital to keep investing, keep paying dividends, and keep repurchasing shares.
I want to leave you all with this final thought to reflect on today. As a company that's been known for over a century for selling basic staples like milk and bread, increasingly relies on high-margin tech, first-party data, and digital advertising to drive its core profits, are we witnessing the end of the traditional grocery store model, or just its ultimate necessary evolution? The numbers clearly show a business transforming right before our eyes. Thanks so much for joining me for this explainer, and definitely keep your eyes peeled next time you walk down the aisle.